Welcome to Private Lending Insights. I'm your host, Rocky Butani. In this episode, I interviewed Jon Hornik, who's the owner and leader of the National Private Lenders Association and also the CEO of Private Lender Law. So Jon Hornik is kind of a legend in the private lending industry and has a lot of influence and a lot of knowledge about what's happening. By being an attorney in our space, he specializes in closings and settlements for a lot of large national lenders. So he gets to see up close the transactions and the volume, and just has really good relationships with some really large players in private lending. So he acquired the National Private Lenders Association back in 2022. And has done a great job of operating it and growing it. So I'm glad to have him on to talk about what's happening in the space and share a little bit about the NPLA. Jon Hornik is also the mayor of Marlboro Township in New Jersey. So he's running a town, he's running the NPLA, and a large law firm. I don't know how he does it. It's quite impressive, and he deserves a lot of respect for that. If you've ever been to an NPLA conference and you see Jon Hornik speak on stage, it's so impressive. He's probably one of the best communicators in the private lending industry, and he not only shares information about private lending. He speaks a lot on the macroeconomic environment. He has a lot of knowledge about capital markets, and he's just a really impressive speaker. So if you make it to an NPLA conference, I highly recommend that you watch his presentation. So let's get it started. Here's my interview with Jon Hornik. Jon, thanks for joining me for Private Lending Insights. How's everything going with you, with NPLA, with private lender law?
Everything's great. First of all, thank you for having me, Rocky. It's been a little while since we spoke. It's good to see you. Hope everything's well with you and everything you're doing. These are interesting times to be in private lending, to be in any kind of lending right now or any kind of business. These are definitely uncertain times. So we're busy, we're challenged, we're working harder than ever. The space needs insight and comfort and everything that's important, and we're trying to give it to them during these very uncertain times.
Absolutely. So, it's a little early in this, if you want to call it a tariff crisis, to see the real effects of it. But what's your take on what's happening in private lending as of right now, April 21, 2025?
So, yeah, it's really important that this date be laid out there because things are changing at a quicker pace than I ever recall in history. So, private credit, private lending has remained strong. I think in a lot of ways, when uncertainty is created, it's the last source of lending so that we stay more robust than some more traditional lending, conventional lending. But the area that it raises concern is the pricing. So the the pricing is changing very, very quickly now based on the uncertainty. And, not to get too technical, but usually when things are unsure, people rush to U.S. Treasuries. And that's the safe haven. That's where people go. And the yield on the Treasuries usually goes down because so many people want it to be safe. And it's not what's happening during this crisis. So one of two things are happening. The U.S. Treasury trade, which is traditionally the safe trade historically, is no longer viewed as the safe haven as it once was, which is really problematic. Or, equally as problematic, those countries that hold treasuries, Japan being the largest with $1 trillion, and China right behind them with $800 billion, are unloading those treasuries. So, how does that impact the private lending space? The long-term rates on DSCR and those products are increasing, with short-term rates coming down lower. So it's unusual. It's not supposed to be that way. Short-term debt should be moving in a different way right now. So it's a weird time, and the spreads are higher than they should be, and people are nervous.
And the pricing, this all has been playing out just in the last 30 days. Have you actually seen pricing change in that way that you laid out, where the DSCR rates are increasing, but the short-term bridge loan rates are decreasing?
The buy on I just got an alert today from one of our clients that the buy on the DSCR has come down, but there's still a premium. It's either 100 or 200 basis points above par, which is okay. It's less than it was traditionally. The concern with the DSCR rate in the long term is what they call the credit spreads. So quick, we'll wrap up, macro on what's going on. You have treasury rates, which is like the interest rate, okay, and it's moving. But it's the risk premium put on top of it because investors don't know what to do with this uncertainty. And those spreads blew out close to 200 basis points above the normal rate, and now they're starting to pare down a little. One of my banker friends said, hey, and we gave this report on the NPLA meeting, uncertainty is the new normal. And if you want to do business and you want to make money, you're going to have to be comfortable operating in a period of uncertainty. And that's really the message that we all have to take. We are not going to sleep well at night for some time now. There is a major trade war going on with China. And those things do not get settled overnight. And, this is a problem. Even the president, who's now leaning on Jerome Powell, the Federal Reserve chairman, and saying lower rates, you're too late. Today he called him, I think he called him stupid, but I'm not sure what he called him. But whatever he called him, that's not going to affect what's going on now. This is the long-term rate. Mortgage rates are up. Everything is going up right now because of this phenomenon on yields and treasuries. So we have to wait to see how it plays out. In our position at Private Lender Law and the NPLA, I fortunately get to talk to a lot of people every day. There's constant texts, WhatsApp chats going on with people, and people are definitely nervous. I mean, it's a nervous time to be in the space. But I will say this, Rocky. I have made the best moves of my career during troubled times because those who could keep their wits about them have the ability to make moves and grab market share. Those who curl up in a ball and hope just to survive, that's a dangerous place to be because that could last a long time. So during every difficulty, I've had leaps and bounds in terms of my businesses. So I have coined the phrase trouble is opportunity. If you have, dry powder and you're willing to take a risk and a chance during these times, there could be big payoffs.
And speaking of people sitting on the sidelines, what do you think about the securitization market? If let's say RTL rates are coming down a little bit, let's say they even just stay the same, or even if they go up, do you think the securitizations are going to slow down and maybe pause, and investors might just say, hey, we're not doing anything right now, let's just wait this out?
As of today, that's not happening. We're not seeing that across any marketplace. But that could change tomorrow. Like that, the problem with the space is, or any investor space, they could wake up tomorrow and go, you know what? I don't have an appetite for any more RTL or DSCR. I just don't have an appetite for it right now based on what's going on. But as of today, the security markets are still flowing. Insurance companies are still investing. They have tightened they're asking for more to invest in the space. They want a bigger return. And what I'm told is those exceptions for loans that are usually included in pools and securitizations are not being allowed anymore. So if you don't hit the required FICO score, it's out. If it's too much of an advance in an area, it's out. If it's in Florida, it's out. So there's the requirements, the box is tightening for what fits into it. But so far, there's been no major investment firms backing away from the space. But again, we quoted, it's April 21st at 4:11 p.m. on the East Coast. By 5 o'clock, that could change. And that's what is the nervousness and the uncertainty right now.
Yeah, and it is kind of early in this whole process. So, maybe we can get you back on in the next 60 days and get another update on what you're seeing. So let's segue into the NPLA. One thing that I've loved about being an NPLA member is in the past was that it's just the the bi-monthly meetings where you guys meet every 2 weeks and it's a Zoom meeting and everyone gets together and just talks about what's happening in the space. And in times like this, that I'm sure your meetings are filling up and you're at capacity because everyone wants to collaborate and talk about what everyone's seeing. So with that, what are you hearing from your members? Is just everyone in the same boat where they're just everything's uncertain? What are you hearing from them, and what are some of the concerns?
So the last call we had a call last Wednesday, which was an emergency call to talk about the tariffs, the policy change, the markets. And a lot of people gave their insights. A lot of people just listened. The NPLA really cut its teeth on providing comfort and guidance during difficult times. Really, during COVID, it really exploded, these biweekly calls, because what was happening was people are all calling each other, going, "What are you hearing? What are you hearing?" And it just didn't make sense not to get everybody on a call. And there's a comforting feeling to know that everybody's in the same boat. And then what's nice about the NPLA is people are collaborating, even though they're competitors. They're talking about decisions they're making. From a market standpoint on what's being discussed, it's pretty much what I said. There's a lot of uncertainty. Get used to living in a world with uncertainty. Our president, whether you love him or hate him, is a bombastic person who just, throws bombs out there. And not literal, I hope, but figuratively, and he likes it. He at any given time there could be a tweet that disrupts the markets and the equity falls. And the thing is, what you're saying, we don't know the long term effect of this yet. I mean, maybe these threatened tariffs bring our allies closer to parity with us from a trade perspective. Maybe, I don't know. Maybe they don't. Maybe they turn us into an enemy and push them towards our China, and that hurts us in the long run. So I think everybody's operating with an acute sense of nervousness, and they're not sure how this is going to turn out. There are some people I've discussed that are contemplating layoffs because they believe that this year is going to be a slower year. And it's turning out to look like that's going to be from an origination standpoint. But, our space has turned to be resilient, elastic, robust during downtimes. And if we keep the fundamentals of what we're thinking about, low housing supply in this country, demand for housing, and conventional lenders not lending, there's always going to be transactions for private lenders.
Absolutely. But I guess a lot of lenders have gotten used to the high volume, or they've hired people to accommodate the high volume that they've been getting. And then if that slows down, obviously they have to make changes within their organization. But do you think it's that the cost of capital is going up and that's going to slow down lending?
Always does. Anytime the interest rate goes up, borrowing course, transactions go down. Right. We do very good in a high transaction environment. And the part of the problem, Rocky, is for so long, we have a young space, so to speak. They grew up with interest rates close to zero. Right. This is not normal. The interest rates aren't actually terrible today. Right. They're not terrible. They're just not zero. And everybody thought how smart they were. Oh, my God, this is an easy business. Of course, when money is free at 0% interest or very, very small interest rate, you're really smart, right? No, you could cut deals left and right. It's just the problem is when things get more challenging is when the cost of money goes up, it's uncertain. Those people who built high volume shops need high volume to keep their payroll. They will be the first to go around some layoffs, and we're hearing some of it. We're hearing strategic decisions being made, what some people are paring down. Very good friend of mine, very successful business guy said, it's easy to get big, it's hard to get small. Very hard to get small. That's when it's hard. Easy to hire everybody and pay them and everything's good. Yeah, kumbaya. But when things get tough, the smart people pare down, survive, protect the core, and then live another day to rise again.
And are you hearing from your lenders that, or your members, I should say, that any concerns about the cost of building and rehabbing from the end borrowers, where their costs are going to go up?
The average cost, the estimation that I saw from John Burns was a 12% increase in construction costs based on the current contemplated tariffs across the world. And my guess is it'll probably be a little higher than that. So 15%, and will that translate into a higher purchase price for a house? It has to, because somebody has to eat that. The problem with the president's move on tariffs is that he's trying to fix a problem that's not tariff driven. The trade imbalances between countries come from the fact that one country can produce the product cheaper than another country, okay? Our country. And the reason why they can produce it cheaper is they don't have unions, they don't have health insurance requirements, they don't have child labor laws. They could pay their workers virtually no money to produce a product. A tariff does not fix that problem. All a tariff can do is bring someone to the table and us tell them, in order to trade with us, you need to pay this person a minimum wage. You need to put health insurance in place like we have. You need this, and that's not going to happen. So I get why the president's doing it. The problem is that the remedy does not fix the problem. And a lot of people we could talk about, I'm going to say this, the approach was wrong. I'm an elected official, you know this. I'm only a mayor in New Jersey. But sometimes policy changes need touch. You do it with touch, you do it with empathy, you do it with sympathy. There's a soft touch. The president only knows a sledgehammer. And, he sledgehammered the rest of the world, friends and foes alike. And this is the result. And I believe it was a mistake. And I believe his actions show he now believes it was a mistake by the fact that, you're getting announcements. So first of all, the 90-day extension on everybody but China, right? While we work this out. And then I saw last Friday, cell phones and electronics are excluded from the tariff. And then we're relooking at the auto taxes as well. So it's the slow back off. But that doesn't stop the fact we're at a trade war with China right now. They keep upping it, and this is what's dictating decisions today, investing decisions. These are he opened up a can of worms which should not have been opened at this time.
Hopefully it keeps backing off so we don't suffer.
He never backs off the way he hits with this. He should back off with the sledgehammer that he used to put into place, because maybe that would help. But this slow drip back off after taking the sledgehammer is not helpful to giving investors comfort in the U.S. market.
Support for the show comes from Ross Diversified Insurance Services. All real estate investors and all private mortgage lenders need insurance. More specifically, they need the right insurance partner. For over 35 years, Ross Diversified has been the trusted partner for over 3,000 property investors and 500 lenders throughout the United States. If you're a real estate investor, Ross Diversified can help you whether you're managing a single rental property or a large portfolio of rentals. And if you're a lender, Ross Diversified can protect you with force-place insurance for when a borrower's policy lapses, or with REO insurance in the case of a foreclosure. They offer competitive rates and hassle-free claims assistance. Licensed in all 50 states, Ross Diversified understands the unique challenges of real estate investing and provides customized solutions to safeguard your assets. Visit their website, rossdiv.com, to learn more and request a quote. That's ROSSDIV.com. Please mention that you heard about them from LenderLink and the Private Lending Insights podcast.
Let's go back to the NPLA meetings. You host those every 2 weeks, and then, like you said last week, there was an emergency meeting. During times of crisis, you can always set those up. And what I love about the meetings is you have some unique people in the industry that get to speak. You've got yourself, who's one of the largest closing law firms in the country. So you see all the transaction volumes and deal with some of the largest lenders in the space. You get some of the largest lenders in the space, some of the securitization players that all get on there and share their insights. Do you typically get most of the membership joining these meetings?
Yeah, I think we got close to 100 viewers last time who were active, and that's probably across 90 plus members in the NPLA, which is amazing across the country. And my favorite part, I mean, it's nice to have the panel discussions, which we like doing with the larger guys, but the best is when you get granular and you start talking to the regional guys. What are you seeing? What are you hearing? Because that's real information, live information you can't get anywhere else. Everything else is usually done looking at analytics on closed loans, which are months in the past. This is the only eyes-on present view of what's going on. And, people are talking about it. They're concerned. People are concerned about the slowdown for sure.
And tell us about the format and the typical agenda for your meetings.
Typically, our bi-monthly calls, we have a presentation from somebody. We just had somebody on from SFR Analytics, and he discussed his product, and then we open it up to questions, and then we open it up to the members to discuss anything they want. So we're doing a broker discussion in the upcoming weeks. So we add really good topics that people concerned about. Fraud is big in our space. We do a fraud discussion, about a half hour, and then open it up to questions and get comments. And the whole idea is that we're coming together as a lending community to make each other better. It's really the only format out there where competing members of the private lending space are sharing information at the same time. Like everybody, you see it happening, and it always amazes me that they're willing to do it. But I think there's an acceptance that we're in this new industry. Now it's a newish industry. And, we're only as good as our worst player. And it's really important for us to push out, the right ethics, the right best practices, legislative updates, everything that's important, because if the investors lose faith in a bad originator, it could damage the whole industry. So there's that sense of community that's really propelled the NPLA into this leadership role in the country for these type of discussions and events.
Yes, and again, I think that's one of the best or one of the biggest benefits of being an NPLA member is participating in these bi-monthly meetings, and anyone can ask questions, and you just get insights from these meetings that you don't get anywhere else, and it's consistent. It's frequent, if you will.
Yeah, we debated at one time to go to once a month, but the membership doesn't. The membership likes seeing everybody, every 2 weeks. And the funny thing about it is they all do business together because, a regional lender or somebody has a box and they can't do a deal. They call their buddy at the NPLA and they say, "Hey, could we do this together?" And so that kind of collaboration is really helping the space and makes us all better.
Nice. And let's go into some of the other benefits of being an NPLA member. For people who are not familiar with the association, if you could just tell us,
Sure.
what are some of the benefits
So
of
we talked
being a
about
member?
the bi-weekly calls. We are constantly covering legislative issues, representing regions, originators in state situations. For instance, Florida's been talking about passing a recent law, shocking, that's going to damage private lenders, and we're involved with that. It has to do with more disclosure necessary for a foreclosure. And so we're monitoring that, licensing issues, a lot of, bad decisions coming out of courts. We're putting in briefs on it. So we're representing individuals and the space in order to get a better result to protect the lenders. We have our annual meetings at our conference that we have We have the meetings 2 times a year, so that's great. Once in March, one in Scottsdale, Arizona this year. We don't have one at our AC event, and I'll go through the dates with you on those in a moment. But everything in between, it's the collaboration, it's the in-person meetings, it's the putting out relevant information to make your firm, company, service provider better. Just last week, we had John Beecham and Eli Novi educate the space on what to beware of in warehouse lines. What could put you out of business? And just a summary of that talk, they were concerned about mark to market, which can wipe out a firm completely, and the fact that a lot of these credit lines don't renew, right? They expire every year. And their advice was you're better off paying for a committed line, which doesn't have mark to market, which they can't pull during these tough times, than the cheaper line, which you'll make more money on, which is more suspect of being shut down during these uncertain times. So, I mean, this is advice from people who are further down the path than a lot of companies, and they're sharing their wisdom. The other thing is we have a robust mentor program in the NPLA, so you could sign up and get mentored both from a firm perspective, and it really turns into career advice too. You know, somebody's getting mentored and going, oh, what do I do? And because you need that guidance from people who are further down the road. So all of that is put together into one nice clean package, and it's a very close-knit group. So I encourage everybody to join the NPLA. It's not like a sign-up organization. You got to get sponsored by somebody. You got to get admitted, because we didn't want people just shining up who didn't contribute to the community, right? You know, I paid my fee and I got the NPLA emblem, and I use it on my emails now. I don't want that. No interest. We want people who sign up, who feel they need to contribute and want to be in a leadership position, because that's the only way we keep improving.
And how many members do you have at this time?
130.
Okay. And I saw on the website the current pricing. So you have a corporate membership fee, which includes 3 people, and then you have an individual. As far as the price point, you know, some people may look at it and say, okay, well, it's $5,000 a year for an individual, or let's say around $8,000 for a company membership with 3 people. What are some of the pushback you might get on the pricing, and how would you address that?
So listen, I think once you participate in there's no one who, very rarely do you have somebody who doesn't stay with it. Like they're either going out of business or they have a health issue. Like that's usually what happens. So I think it's one of those things that take a gander. Like if you want, I'll let you join a call for free. Just reach out to me. I'll put you in touch with Amy Kame, who runs the MPLA with me. Once you see the value it adds and that there's nothing like it in the space, you'll see the value and it'll add. The money it's not big money. The NPLA is not a huge money maker. It functionally operates at a not-for-profit because we give back at all our events. When we have a conference, for example, we have a golf tournament, the NPLA members come for free. We have dinners, we have cocktail parties. We have stuff that we reinvest in for the membership in order to promote the networking aspect and build the community that we want to build. But I don't think it's for the value the NPLA adds. I think it's the best value around. I don't think it's a money issue. I guess it would be for those who don't understand and appreciate the value. But a lot of those people are like living in their silo. They're doing what they do, and they don't consider the broader group or the consequences of the broader country operating. And that's what we're trying to bring insight into.
And I've tried to have this conversation with lenders and even service providers that it's such a valuable way to get updated information and get these close connections to peers or competitors or even service providers that just it's just a great way to access a lot of the largest lenders in the space and even some smaller ones as well, because you get that interaction with the members so frequently.
And listen, it's everybody needs. We're a village here. Everybody needs help. There are times smaller firms can't fund deals, but they're good deals. They should reach out to other members and figure out, hey, I'm going to give you a referral on this, or I'm going to help you get this deal. And that always, whether you get a compensation for that or not, I've always done very well helping people out with just good karma. And it's always come back to help me. And if it didn't, then that's okay. That person needed more help than they were willing to give, and that's okay too. So you just find your way. I believe in a lot of positivity and putting good vibes out there.
Agreed. Okay, let's talk about the conferences. So you host 3 conferences per year in various locations. Tell us about the schedule for this year, and tell us about the Miami conference, which just wrapped up last month.
We did a March Miami conference. It was the biggest conference in the company's history. We had over 700 attendees. It was sold out of sponsorships, and it was amazing energy. So that's at the Lowe's. We then turn around and go to the Hard Rock in Atlantic City, and that's going to be our broker focus conference. So we believe that brokers are being underserved in the space. They don't have a home. Since we have all the lenders showing up, we're a natural fit for them. So we're making this June conference, and possibly all of them, are the NPLA Broker Focus Conference. So we're inviting all the brokers from the Northeast and across the country to come down and meet the lenders to do deals. And we believe this is, for Atlantic City, which is uniquely situated in the Northeast, a great way to get attendees and spread our word. So that's coming up in June 23rd and 24th at the Hard Rock Hotel and Casino in Atlantic City. And there's nothing better than the Jersey Shore and a summer event. So check that out. And then this year, we've moved from Austin, Texas to Scottsdale, Arizona at the Fairmont Princess Resort, September 28th to 30th, which will be another big event there for us. That's our West Coast South event where people come. So we do 3 events a year, always in Miami, always in Atlantic City, and it had always been in Austin, Texas, but we've pivoted to Scottsdale, Arizona to try that venue. I believe in putting a flag down in a city and getting better with your execution year after year. My predecessor, who did the conference, believed on going at different places each year, and I don't want that. I want to know where we're going. I want to know how the execution is going to be, and I want everybody to have some comfort that, okay, they know come March they're going to come to the NPLA conference in Miami at the Lowe's and have a great conference.
I like it. And, one thing about the Northeast is no one else in our industry or just in the residential real estate or residential lending space, there's no event or conference in the Northeast. And a lot of people think, oh, Atlantic City. Well, the great thing about Atlantic City is you've got the big venues. So the Hard Rock, I attended that conference 2 years ago, and it's an amazing venue. It can accommodate a lot of people. It has the dining and entertainment all in one place, and more importantly, it's very strategically located within the broader Northeast, where anyone in the DC metro area all the way down to Virginia, they can drive there in a short amount of time. People from New York can drive down there. From Philly, it's just a 1-hour drive. So I like that location.
All your points are free. The Hard Rock is a huge venue. You literally check in and never have to leave the casino. All meals, like everything for as many days you're there. The other thing is I grew up in New Jersey, and Atlantic City was always, hey, you want to go? Let's drive down. And it's an hour and a half away, and that's the way New York, Pennsylvania, New Jersey sees it. It's not a pack the plane trip, go, so it lowers the cost for a lot of the attendees, which is why we like it. I bring the entire private lender law firm down there for 2 nights because I believe that in order to be really good at transactional, and we do foreclosure work, You need to understand the space and your clients. So there's total interaction going on. The entire firm comes, which is great. And I like the event. I look forward to it. So people are like, oh, Atlantic City, it's not Vegas. I go, I don't want to be in Vegas. Vegas has too many distractions. There's too much going on outside of the business. I go to a Vegas convention and conference, and like the first day's great, but the second day you don't see anybody because they're either hungover or they're gambling or they're doing something else. It's not the same in Atlantic City. The gambling, it's there, but it's not the focus.
Yeah, I like it. And I do like that you're trying out Scottsdale this year, because that's one of my favorite cities to visit. And I haven't been there in a long time because there haven't been any industry conferences there. So, and I think that's also strategically, a lot of people do have to fly there, but it's sort of in between Texas and Southern California. So I think I think that'll do well. And I'm excited for that one.
But we've talked about going to California. I haven't to have do an NPLA there. I haven't gotten there yet. It's more likely than a Vegas event for us because I'm down on Vegas. I don't think people go to Vegas to do business. I think they go to Vegas, which is fine. I don't judge anybody. But one of the things I want to have happen is we have 3 pillars in the NPLA. You probably heard me say this. We have networking, education, and entertainment. And networking, people have to be in the same room working together. They have to be talking and helping each other out. Education, you'll get there. I think we're the best in the space in that in terms of our panels, the questions, the interaction of the app is great. And then entertainment, it's for us to entertain you while you're there so you keep coming back. I think when you lose each of those things, other than the entertainment, the networking, the education, you lose when you go to a venue like Vegas.
Vegas also has, the venues. They're really kind of the conference convention capital of America. So from what I've heard, other event organizers, they just have so many options, and it's just although even in our space, we don't have that many people attending conferences. We're not getting thousands of people. So it may not be necessary to always do it in Vegas. It's just it's just one of those places where they're set up for it. They're kind of masters.
Listen, I love going to visit. I just don't think the amount of the real business getting done. I think people go to Vegas for a boondoggle. They don't, and I get it. It's an amazing city. There's only one Vegas in this country, and it's good. But I just don't. I want to control the NPLA. Vibe and visit and achieve certain goals, and it's harder to do in Vegas, I believe, with what our mandate is.
Sure, and there's plenty of other conferences in Vegas, so it's nice to have other places to visit. So I appreciate that. And then tell us about the format and the agenda of the NPLA conference.
So it starts out. We start the networking early. Again, one of our milestones, our pillars that we want to hit. So you come in on it's a 2 or 3 day event, depending on which city it's in. Atlantic City is going to be a 2-day event. The first day setup starts around 1:00 for the sponsors, from 1 to 3 or 2 to 4, and then we open the conference doors for a pre-networking situation. And that's always a ton of people show up the day before to do. It's kind of like a pre-sale. Do you ever go to a pre-sale before the sale opens and everybody comes in? People like coming in early and just talking and getting business done. So many people have told me that, the pre-networking that we do, they get all their deals done and they're thrilled, and then they could relax the next day and go to the education. Great. So you go 2 to 4. We do a kickoff, opening party, cocktail party. Everybody has a great time. More networking. Close it down for the night. Next day, start first thing in the morning with a breakfast. Go right to a capital markets panel to give a macro update on what's going on. And again, this day and age, with what's going on with the uncertainty, like we spoke about earlier, you need that kind of education. And then we shut down the general session, and allow it to open up just for networking in the sponsor for a good another 2 hours at that point. And people are walking around and getting deals and feeling good. We open it back up for a few more sessions, have lunch, close it again, the sponsor hall, open it back up, run through the afternoon. Then we do another networking session by closing the general session down, 4 to 6. Then we do a dinner or closing party. So there's so much, you're spending so much time with people that you want to do business with people you know and you like. And this gives you every opportunity to do that.
Love it. I'm looking forward to the next one. And I've been to a bunch of NPLA conferences in the past, and they're amazing, and they're very well put together, very professionally done. So keep up the good work.
Thank you. Appreciate it so much.
Yeah, sure. And before we wrap up, for people who don't know you, you operate Private Lender Law, which is a law firm, serving the private lending industry. Just tell us a little bit about the services that you provide, and provide any updates if there are any.
Sure. Private Lender Law is the largest law firm representing private lenders in the country right now. We do 1,000 loan closings a month in every jurisdiction. We've just recently launched last year our Doc Lab, Doc Generation Interactive program, which is taking the industry by storm. It does things that no other system out there does, which is amazing. It not only generates docs, but it allows quicker amendments to docs as deals change, because we all know they change overnight. It allows you to use your templates on this system. It gives you a lot of optionality, and you need that in the space. We do foreclosure loss mitigation in every state representing business purpose lenders. We represent investors with NPLA work, forward flow agreements, credit line agreements. Both institutional and non-institutional investors come to us for counseling, and we do regulatory nationwide. If you're starting out in the space and you want to go to a new state, you could come to us, and that's a turnkey advice quickly at affordable. Or if you're experienced and you want to up your game in terms of execution because you're feeling pressure that execution is becoming more and more important, we could help you there too. So we live in the space. We are lawyers. We don't claim to be anything else. We don't sell software. We don't do other stuff. That's what we like, being lawyers. And our motto is always here, always on. So if you email or call, you will get a return email or call within 20 minutes. That's what we guarantee.
Love it. Cool. Thank you very much for that. So that's all I had on the list for today. Maybe we could have you back in the next 60 days or so to share more insights or updates on what's happening during these crazy times.
Absolutely. I'm so happy to be here. Rocky, let me go and just say something to everybody watching. You are one of the nicest, kindest people in the space. And we often talk about it. Some people aren't as nice, but you happen to be. You're classy, you're nice, and we appreciate your support. And it's really good to reconnect.
Mm-hmm. Oh, you're too kind. Thank you for the kind words. I wasn't expecting that.
But it's true, and wear it proudly.
Thank you. Really appreciate that.
All right. I hope to see you soon.
And that's a wrap for my interview with Jon Hornik. I hope to have him back on the podcast to share more insights. It's good to have individuals like him who have such knowledge and insights into what's happening in our industry. So I'll try to get him back. I do want to address my NPLA membership status. I am not currently a member of the NPLA. I was a member for a couple of years. I canceled my membership in early 2024, and that was due to the fees. It was really a cost-cutting effort that I made in early 2024, and that's the reason I ended my membership. But it's not completely ended. It's not like I'm going to not become a member in the future. It was just to save on some expenses. And, for a business like mine, yes, it's great to be in front of lenders all the time. But it was just a financial decision and nothing more. I've also not attended the last few conferences. The last one I attended was, I believe, Atlantic City. So I missed the Miami conference. I am going to attend the Scottsdale conference in September and looking forward to that. So as far as becoming a member of the NPLA, I do recommend it if you're a lender and if you're a service provider as well. And if you can get past the expense of it, I think you'd find a lot of value in being an NPLA member. If you want to learn more about the National Private Lenders Association, visit nplaonline.com. When you reach out, please mention LenderLink and Private Lending Insights. Thank you for tuning in and listening all the way to the end.